Hi, welcome to the Market Alert for Wednesday, the 3rd of September 2025. Sit down, buckle up. This is going to be a bit longer than normal. There is all sorts going on and things that you need to be aware of. I spent some time last night having a look around and seeing what's coming because it just doesn't feel right at the moment. So there's plenty of information to impart here. But let's kick off with the news headlines first. Bullion, Bitcoin and black gold bid as back to school batters bonds and big tech stocks. But the volatility market knows this Friday is all about that matters. For now, the non-farm payroll numbers out on Friday. US stocks declined on return from holiday weekend amid global debt concerns, and that's the bit there, global debt, which is out of control. Global risk-off sees stocks and bonds weighed while dollar gains ahead of the jolts. Obviously, that's again seen as a safe haven, a bit like gold. You'll see money going into the US dollar. False concept, personally, to actually even think about that, or full strategy. Gold far superior, and it's obviously, as we get into the market alert, you'll see that that's where the money, or the real money, is actually heading. If we look at the top stories, UK long-term borrowing costs reached 27-year high. You'll see all of this sort of stuff. UK market slides as debt angst drives 30-year yields to highs of 1998. And yet when Liz Truss was in power and these yields were lower than they currently are, we were all going to lose our pensions. It's funny, isn't it, how Rachel from accounts can manage to stay there whilst the UK borrowing and long-term debt continues to grow. Borrowing cost 27-year high. GBP dropped yesterday. The cure for high rates might be higher rates. A case study with UK long-term yield. So we're in a mess, but it's not just us that's in a mess. France too, their debt is also growing as well. It's like 2008. It's the calm before the storm. And more on this as well. Trump's tariffs are currently deemed illegal. The appeals court on Trump's tariffs. Trump tariffs, what happens next after the court rules them illegal? If they do confirm this, then again, another potential to bring down the markets as well. And if you want to see where we are as far as stock valuations are concerned, have a look at this video yesterday that Mike Maloney released. Analyst who predicted the 2008 crash sounds alarm. Gold and silver to be rocket propelled. Absolutely. The day for silver has come. And you'll see, if I can just bring this down, you'll see there in the headline, stock valuations hit new all-time high. Every metric is at an all-time high. You can see 1929 crash, 1966, it's not 65, 1999, and where we're currently at as well. So it's just a matter of time before this lot starts to make its way to the downside. But certainly interesting times. I don't think Santa's going to be putting in an appearance this year, not with the backdrop of everything that we've just looked at there. It's not looking good at all. And then there's the tax hikes that Rachel from accounts is going to be bringing in as well in her autumn statement. So it just gets worse. It gets worse. Right, let's have a look, see what economic news we've got today. Well, we've got Lagarde out. The criminal herself is going to be out today. She is a convicted criminal. I can say that because it's a fact. And monetary policy report hearings is out, and then jolts at 3 p.m. The market's going to be looking at that for some source of idea and inspiration to try and attempt to move prices back to the upside. So with that, let's have a look at the markets and kick off with the Dow. So yesterday the Dow was down sharply. The volatility is picking up. We're down past the 20 bar moving average as well. Does it mean it's going to continue lower? Not necessarily just yet. If we go to the all-time high down to yesterday's low, you can see we've got a bounce already off the low there for yesterday. So I'll be looking to see how much momentum we've got on the upside, whether the market can get past 89%. We've already seen this here where market's been tested, and we've also got it in here as well, and the weakness seems to be dominating the market at the moment. 30-minute chart, even the futures moved the market lower. The cash market tried to bounce, which it did, but overnight is failing at the moment. We're down below the DP, the 50 EMA, and the 20 bar moving average as well. Meanwhile, in Europe, well, we got one hell of a hammer in yesterday. You can see that we traded down to 89% retracement there. Market's looking weak. Keep an eye on this low during today's trading session. We have got a bit of an oversold situation there in the daily chart, though, with the stochastics trying to cross back to the upside. But any sort of bounce in these markets at the moment is going to be short-lived. The landscape has changed from making daily all-time highs to now a massive uncertainty of going forward, and we've also got, it's the everything bubble, isn't it? Everything apart from gold and silver is in a bubble, massive bubbles. I didn't realise how big these bubbles were until watching Mike Maloney's video last night. It's just jaw-dropping to see the financial situation across the board with regards to stocks, bonds, yields, debt, everything, how everything is sort of peak debt and overvaluations. 30-minute chart for yesterday, market moved lower, a bit of a bounce into the evening, but overnight there's still instability and weakness. So the market, keep an eye on the low of yesterday, and if that's taken out, like I say, go back to the daily chart, and this will be the sort of target we're looking for on the downside. The only thing that will support this market today is the prospect of the JOLTS numbers being released at 3 p.m. So into the S&P, it's doing its damnedest, and there's a great piece about the S&P on in the video with Mike Maloney. Well worth a look. You can see yesterday they're desperately trying to buy back this market. It is in the oversold territory, but if any market's going to make a return back to the upside, it will be the S&P. Like I say, have a look at Mike's video. I'll drop a link in the description. So the market down yesterday. We got a bit of a cash bounce there from the reopening of the cash market from the Labor Day celebrations. Prices back up overnight, and we were sitting at the DP, unlike the other markets that we've looked at thus far. In the UK, again, it's not looking good for Rachel. Any sort of bounce now in the UK market is going to be a dead cat one. With all of the financial problems that are looming, and beyond that also the civil unrest that is starting to show itself as well with the immigration side. Also noticed that Starmer wants to bring in digital IDs for all of us. It said it's one way of curing the illegal immigration. I'm not going to get political, we'll be here for hours, but again, it's a red herring. It's a way of just making sure we're in a self-imposed prison. That was in the I paper. Let me just grab that for you. Let's just have a look at that. I know we're off topic here at the moment, but let's just have a quick look. So here you go. Starmer plans ID cards for all the UK citizens to help stop UK boat migrants. This is absolute tosh. Absolutely and utter nonsense. They know who we are. Anybody that's lived here, you've got a national insurance number and everything else. This is a way of bringing in the prison state and making sure they have full control. I'm not going to go into this because, like I say, we'll be here for hours. I just find this absolutely appalling, and people will buy into this. Oh, it'll make me feel safer. If anybody thinks that this is going to make life safer, because that's the pretext they always use, oh, you'll be safe and we're looking after you. It's not. It's about losing freedoms. So just be warned. And this is the precursor to the CBDCs, the digital pound, which also exists as well. I've shown you that before, but just have a look. Digital pound, CBDC, the Bank of England already have the website set up. So the two go hand in glove, and it's a full control mechanism for you and I. That's all that's about. Anyway, back to the market. So yesterday down for the FT 100, down to the 50 EMA, or heading that way, looking weak overnight. The yield situation isn't going to help. The debt isn't going to help either. 27-year highs. Yeah, it's not looking good, is it? So yesterday down, back up, and then back down. Like I say, it feels like 2007 to 2008. 2007 we started with these wobbles, and then eventually the whole thing came tumbling down, as we saw back then. And then of course they've just printed their way out, or tried to print their way out of the problem, kick the can down the road all the time. But it's something's brewing here. It's not. This is different. This is different this time. So the FT struggling there, and that's without the autumn statement either, and say the new taxes that she's going to be bringing in, implementing as well. I'll spare you those, but there's another great video by Ann Poulter, which is well worth a watch. She covers this in her video, and it's terrifying. Is the only words that I can use. Anyway, let's have a look at the US dollar. So US dollar moving up, no surprise there at the moment. We're stuck in a sideways range. We're heading towards the top of this. If the rate cut does happen on September the 17th, then the dollar will move back to the downside. Let's have a look at the metals from yesterday. Exciting stuff here. So we're kicking off with the silver market. The only concern is there's a lot of supply coming into the market yesterday, but it looks like it's been absorbed, to be honest with you. So the sell orders that were around at the 40 level are being absorbed, and we managed to put in another high yesterday of 40.96, so nearly at that 41 level. We're coming off the lows as well overnight by the looks of things. So it looks like the metals time has really come. Well, gold already had, it's just that silver is now playing catch up. So moving higher yesterday, overnight in Asia, the market down to the DP, but already starting to come off this level as well, which is great to see. Now, yesterday I mentioned in the market alert about the gap in the gold-silver ratio, and we'll come to that in just a second, that gold would need to accelerate faster than silver, which it did yesterday to fill that gap, and you can see exactly that there, the market moving up. You can see yesterday when I recorded, the all-time high was 33508. We can get rid of that one now because that one's gone. We can get rid of that one as well because overnight gold has made a new all-time high, and the fact that the gold is moving like it's moving, combined with all of the background stuff we've just looked at, this is going to look very cheap going forward. I did say 4,000 by December earlier on in the year when we had the move in April, and it's not looking too shabby, to be honest with you, the way this is going and the way it's going to unfold as well. I mean, I can't even begin to imagine what's going to happen if the courts rule that Trump's tariffs are actually illegal. So that one could come out of nowhere as well. 30-minute charts, you can see there that price is moving up. Just going back to the Trump tariff thing, I mean, you'd think they'd actually, figure that one out before they actually implemented them, wouldn't you? Say, is this actually legal to do? But then the hubris of Trump and the arrogance and no surprises, well, I can do whatever I want to do, syndrome. And now he's going to get caught out by the looks of things with it being an illegal move. So gold moving up lovely yesterday, and it's also starting to move back to the upside again once more. This is just going to continue with pullbacks as we've seen, and as I mentioned a few weeks ago many times in the market alert about you get to the end of August, that's the metals time normally for rallies. That's exactly what we're seeing, but this time it's different. There are fundamentals to back it, and a massive uncertainty that is pervading the global scene at the moment, whether fiscally, geopolitically, wars, and other things. In fact, speaking of wars, let's just have a look at this as well, which is also slightly alarming. This is the top story that's on the Sky News website this morning. We've got Xi, Putin and Kim unite at China's biggest ever military parade. Is there a subliminal message there? Trump sends a message. I'd love to know what the message is. It's probably in there, but I'm not going to have a look at the moment because I've already spoken far too long. Right, let's have a quick look at yesterday's trades. So in the pre-market session yesterday, prices were already lower, which you can see got down to the low of the previous day as well. Tried to bounce off this level, but it was a waste of time because as soon as the cash market kicked in, we had a potential buy signal which failed. The market then put in a sell signal, which didn't, and you can see there the market continues all the way down to the S3 level and beyond. When you get to that sort of level, the market tends to slow down at the S3, which I've mentioned before, and prices then do a quick test, shake out a few people, bring in the buying, pick up the cheaper contracts there, and then bring the market back. And then this is the way the pattern was. Another attempt to move higher, another dead cat bounce, another move back to the downside, and then we just see this continue lower all the way through to the Dow futures. And then we get into the afternoon session there. It's fairly quiet in the kickoff to the Dow, and then market moving up. Then we got the economic news, and again we had a potential sell signal there that wasn't filled, and then prices moving higher once more, and then filling on the sell side to see prices continue lower once more and go back down to the lows it made earlier on in the session. So what this is showing for yesterday and also going forward is that the upside has lost its interest for traders at the moment, and they seem to be selling back into this market. So good moves yesterday, just the one loss in the opening session, but other than that there were some half decent moves, and I'm expecting the volatility to increase as well, as most traders or the crowds don't seem to see the risk that is actually coming there. Right, that will do for this one. Apologies it's so long, but there's an awful lot going on, so I just thought I'd bring it to your attention. And if you've stayed this long, well, thank you. It's very much appreciated. So have a great day, and as ever, thanks for watching. See you in the next one.